G'day folks, this is not a video I am fond of making. The data that we are going to go over today speaks to me in profound ways that I think the likelihood of a recession hitting us is getting greater and greater day by day and month by month, with the Federal Reserve largely under anticipating the rate of inflation that is about to impact us in the coming month. We are going to go over the entire commodities market data. We're going to take a look at everything from fuel prices to steel, aluminum, copper. We're going to get into the food market, the general housing market. We're going to take a look at the jobs market to see how it competes in this inflated market. And honestly, the Federal Reserve, guys, at some point in the next coming quarters is going to increase interest rates way higher than this little bitty 0.25% basis point that isn't going to largely impact anything. That actually drove the markets up. It offered some certainty where there is no current certainty in this market. Like I said, guys, I am more bearish on the market than I generally have been in a while. I'm still continuing to stack cash. I'm still largely invested in these markets, but I'm being extremely cognizant of the companies I own and what exposure they have to these different aspects of the commodities and just general economy, because my God, this is not fun. This is not good data to go through, guys. And if you are a general consumer of the market, I'm going to explain to you why a recession might just be around the corner, because all a recession is 2 straight quarters of negative GDP growth. And negative GDP can just be driven by the fact that consumers won't have enough money to basically spend on more consumer goods and discretionary items. But take a look first and foremost at copper. Copper is used largely in the renewable sector, everything from electric motors to wind turbines to housing and plumbing, and it just hit a record high, guys, an all-time high of $4.75 a pound. Lumber, obviously largely used in housing building material, and if you didn't think it was getting any more expensive after it fell off a cliff in the midst of 2021, we are back pushing all-time highs here, guys. Nickel, one of the largest battery metals that exists, largely undertalked against lithium and graphite, and a huge exporter coming from Russia is now getting driven up from the Russian conflict. No, we're not at record highs, but we are still at a decade high and continuing to trend upwards, guys. My God, uranium, we talked about this yesterday. If Russia gets control of the Ukraine and Russia are in the top 10 world exporters of uranium. And if they get control of the Ukraine, that's going to make them the 3rd largest exporter of uranium. And uranium just hit literally a decade high. Unbelievable. Congrats to you guys holding those uranium stocks. Let's talk about coal. Even though we don't want coal, it is still a large proponent globally for energy production, including things like peaker plants. China's been trying to get control of them. And look at what has happened to the coal price. If you saw this chart in the stock market, you'd say we are in a bubble. Most of these charts are on excessive growth rates that are what's causing the inflation rate to get out of control. Gasoline, obviously outside of Brent and the WTI oil price, the barrel price, which hit over around $10 a barrel right now. When that gets refined down into gasoline, sometimes in the general market, it can cost more to refine it and get it into your gas tank. So we are seeing gasoline about to hit a 20-year high. It is right at the cusp, guys. Natural gas, something we use to heat our homes. The RNG sector, a lot of companies are using basically renewable natural gas to power vehicles, something like Hyliion. I know a lot of Hyliion investors out there are extremely bullish for those reasons. But when you see obviously RNG and natural gas flying through the roof, this is only causing more problems from every aspect of the economy. Steel, oh my God, decade highs, guys. Iron ore, not exactly full decade highs, but it is pushing pretty high premiums here today. Wheat, this is where things get scary. Let's talk about the food market here, guys. Wheat, canola, any of these basic like food exports, unbelievable. Corn, all this stuff. Look at this. If you saw this in the stock market, you'd be like, oh, I'm selling this. I'm taking profit. There's no way this is going to last. This is a record high in my lifetime, guys, for wheat export. And the consumer food price index is about to hit, again, guys, literally a record high. This chart goes back to when I was born in 1992. And like I said, guys, scary, scary stuff. I mean, the last time we saw this was coming out of the financial crisis, and I don't know what's going to happen here, but God, we can't be spending this much on food. It's just insane. I know a lot of people have been texting me in our WhatsApp group telling me how these prices have inflated by 100% on certain goods. And take a look at the median prices for housing sales right now. This is something that is largely disconnected from a lot of, obviously, the inflation or the inflation rate indexes that the Federal Reserve takes their data from, because they only take it from rent. They don't take it from what it would cost to buy a house. But in the U.S., guys, you go back to 2020, you could have bought a house for $322,000 on average. If you're in a major city, this is largely going to be exacerbated 10 times worse than what this chart's showing. But just take a look, because today you're going to be spending literally 25% more or 30% more from the 2020 high, and now it's about $408,000 on average. Now, the consumer car and truck index is also extremely intriguing here, guys, because never in my lifetime could you buy a used car and then a year later sell it for more than you bought it for. Historically, that's never existed really in my lifetime. And take a look at this chart here, guys. I mean, it's unbelievable at how much used vehicles are still going up in price because of the chip shortage. Obviously, everything else in between, from getting, metals, and just the lack of new supply in vehicles. And now is not a time to buy a car. If you own a vehicle, you're looking at buying a new one, I would sit on my hands, repair the one you got, and ride this out for another year or two, because this is just not a fun market for any aspect of your life. It's just unbelievable. Now, talking about the income of how people are kind of supporting themselves through this, guys, here's an average salary in the US for 2022 is expected to be $53,490. I'm sorry, but unless you're married and you're both bringing in this income, you are not living near any major city in the US or Canada and living off of this. You'll be broke, living paycheck to paycheck. And I find it fun looking at the popular salaries and just the shift that's going on in the economy, because right now, pharmacist, data scientist, nurse practitioner, software engineer, accountant are pretty much some of the highest rising income brackets for jobs right now. And then firefighter, electrician, pharmacy technician, medical assistant, and certified nursing assistant. I don't know why the nursing and medical assistants have seen a massive drop off or decline in the total income they could make, because you think because of the pandemic that would have really bumped up with the nurse practitioner, but apparently there's just a lot more value driving into pure nursing. But just taking a look, guys, there's so many fun jobs in here, which is why I'm going to leave the link in the description below to help you guys out. If you're millennials, if you're very young looking for a new career path, I would try and pick one that is in the upper limits between 70 and 100,000 per year. And this is coming from somebody that's never really made more than 40,000 a year up to last year, when I finally bumped my income up to around the 6-figure level. But you guys, this is not a good market. This is a stress load this puts on everybody, and just trying to live your daily life is what's going to push us into a recession, because GDP, guys, gross domestic product sales, start to decline when the consumer has less money to spend, and the money they are spending isn't going as far in specific daily items, right? And how is the stock market seeing this? Well, the stock market has been responding pretty likely happy for some reason. I mean, I'm looking at CNBC videos of people saying, we've caught the bottom, you got to buy stocks. And obviously we don't know how the markets perform through recessions, through this weird environment that nobody has really lived through in my entire history. This is like a brand new, unforeseen market. And honestly, it should be taken as something of caution, of bearish sentiment, and just be very cognizant of what you're buying, because we're seeing every stock get hammered. Foot Locker recently posted earnings, got hammered. GM getting hammered. Rivian just had to increase the prices of their vehicles drastically. That's something that could come into play with Tesla vehicles. Now people can't buy electric vehicles for better prices, guys. I mean, it's going to be neat to see when we get through Q1 earnings and Q2 earnings, because that's really going to shine a light on how bad these commodity prices are affecting these different industries, because we've already seen it impact, obviously, things like Clorox. When we're talking about Pepsi and Coca-Cola, when aluminum prices and steel prices are flying, that's all used in the packaging goods. Those prices are going to go up and get passed down to the end consumer. I mean, there's just so much different impacts going on, guys. What does that mean for the financial sector? Because the banks have been excelling through this, and obviously the banks continue to do good if interest rates keep going up, but obviously the consumers get impacted and stop taking loans, mortgage rates slow down. That'll inevitably bleed into the financial sector, guys. To be honest, one of the best places to hide out, as far as I can tell, is in general utilities and telecom, because telecom is largely industrially set up to basically continue to get monthly income from just phone bills and services that at least people are using on a daily basis, where you're not really as kind of conflicted by these consumer prices in commodities. But other than that, maybe the real estate sector you could hide out in. I still think there's some value there. But honestly, I'm going to make a video tomorrow. I'm going to talk more broadly about this. And if you guys want to see me do a video on basically the best jobs you can get today and what the general job markets look like, because obviously people keep hearing that we are hitting record numbers of increasing in general job income because of how much demand there is for the jobs market. But generally, looking at the broader scope picture, it's not that bright as they're making it out to be. So like I said, guys, I didn't want to have to make this video. When I look at this data that no one talks about, it makes my gut sink to wonder what happens if this doesn't slow down, because there's no way inflation at this current pace looks like we're going to see a leveling off. But I pass the question off to you. What do you guys think about this in that comment section below? I'd love to hear about it, but stay cool, stay awesome. And as always, I look forward to catching you in the next one.